There is one beautiful thing, guys. Do you know how in the equity markets, how the game of going public has been played? I explained this before, right? Where a company starts off private, and if it has an interesting model, it can attract angel investors. Have you guys heard that term, angel investor? An angel investor, have you guys heard that? That's what it's called in the industry, an angel investor. That's an early investor. Early. They come in to this new company with an interesting concept, and they take the big risk. They might participate in the first round, round one, of funding. So this company might receive, I don't know, $50 million. All right. Then if at that level they operate for a while and their model becomes more proven and they actually grow a bit with that first investment of 50 million, the company might decide to do a second round of funding. So they'll say, okay, we're going to do another 10% of our ownership we're going to give out, but now the valuation is higher. So the angel investors that came in on round one with their 50 million got in at the company valuation. Let's say the company is valued at 25 million, but they got 50 million, but that's fine. Okay. Let's say 125. Let's do it like that. So company valued at 125 million. This angel investors came in, gave them 50 million to grow a little bit. Second round of investors come in at round two, but now the valuation is 200 million. And they get maybe 70 million, let's say. Then there's a third round if they grow from that point. These investors, now at each round, the first angel investors get a chance to participate first, and whatever's left over, other outside investors can come in. But these guys are buying in at a higher valuation. Maybe this one's at 300 million. And they raise 100 million. And then maybe there's a fourth one. Let's do this one. This one's really big, where the company has grown to now have a $1 billion valuation. They get 250 million in this round. Now, after this fourth round, the company is valued at $1 billion. Now, look at what the first group has made. They have gone into the company at a $125 million valuation. Now their investment has skyrocketed $1 billion. Now the company decides, with the help of the angel investors, that they're going to take this $1 billion entity public. They're going to bring it to you, traders. That's right. They're going to sell it to you now. These people want you to buy it from them. That's what going public is. Selling your successful investment to the public. Now, what's interesting about this is that the public IPO, the public can't participate at these early levels. The public is forced to wait for a late stage level by law. This is the law. You can't participate early. Only institutional and accredited investors. You must wait for the IPO and buy in late. Now, is that fair? Do you think that's fair? Tell me, does that sound fair to you? This is why 70% of all IPOs sold to the public are significantly lower in price 3 to 6 months later. They've sold a hot potato. They've sold a late stage investment. Now, check this out, and this is the amazing thing. You see, you and I are buying and have been buying into Bitcoin before the institutions. So we're the ones coming in round one. The institutions are here waiting. Why can't they participate in round one? It's too little. So they have to wait. Then you and I come in on round two, and they're still waiting. The institutions are still waiting. Why? It's too little. But meanwhile, Bitcoin's valuation is going up. Now we come in on round three. The valuation's bigger. The institutions still can't come in. It's too little. We have flipped the frickin' switch on them. We flipped the game. Only when Bitcoin went from 0 to $1 trillion did institutions start coming in, right? And even 1 trillion is still too small for some. There are some institutions that have in their charter, we can't deal with an asset that is less than 2 trillion, 5 trillion. These are things that are baked into their charters. If an institution has $9 trillion under assets under management, 9 trillion, what are they going to do with a whole market that's only 1 trillion? Do you understand? So now we front run these institutions. This is why the higher Bitcoin goes in price, the more institutions it gets, the more buyers come in. It's not like the stock market, whereas the higher a stock gets, the less people buy. No, it's the reverse. The higher Bitcoin gets, the more people buy. It has flipped the switch. It has flipped everything upside down. It has made the little guy the big guy, the early. It has made the little player the early player for once. It has given us the ability to front run all of this big money that can't touch it until it's $200,000 or $500,000. And that's our position now. We're front running a wall, an avalanche, an ocean of money. We're front running them the same way they front runned us for all this time. And that's powerful. So I say keep front running.